Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Wednesday, and we're here now at the 10th of August, 2022. Boy, are we in a bear market rally or something else? You got me questioning it. This is a bigger rally than I was looking for. I didn't expect this much of a rally. I expected a rally. You get bear market rallies in an overall bear market. Is the NASDAQ still in a bear market? It rallied enough. I don't know that it is on the close. Got to go look at it, but I've got my doubts. So, questions. Does this mean you get bullish here and you start buying knowing that the Fed is going to do at least 50 basis point rate hikes for a while to come, probably into year end? I'm not convinced I want to do that. I'll let you guys do that. I think the headwind is still there. I think you caught the market today. I think you got the bear guys and you took the market up. Was I short? Nope. If you're a subscriber of mine, you know you came into the day long and still are long. In fact, in some, I had to take half profit on the way up this morning, and now you're just riding on the market, okay? Futures market got out a little too soon. I didn't want to go through the report. Let me explain something on my experience level. Today's report was the equivalent of a Fed meeting. I said that, and I have a rule. I don't go through these big reports. Why? Because what happened today is what happens. You're either up or down dramatically, often, and it happens so fast, you can't move. The market's just gone on you. I know you're going to tell me we'll have stops. Well, then I'm locking in a loss. I had a profit going into this morning, and I'm going, why do I want to go through that report? So last night I told my traders, we have a profit. Let's get out. Did I leave a lot of money on the table? Count on it. Wish I could get that back. Would I go through the report? No. So that's how I look at the market. But let's go to the charts and let that tell us what's going on. Well, you can see we're up 1.5% for the week. We are over the 18-week average, so the bias is up in the market, and I've been telling my clients the long side, certainly not the short side. So I've been on the right side there. The market stuck its head up, hasn't been here in a while, but I have been telling you that this area is a lot of resistance. You're in it. Big zone, but you can't get away from the fact that you just came from June all this way up. It has fought trader upon trader. My good news is, number one, I had an operation. I wasn't around that last week, but all my signals last week were buys. And if you're a subscriber of mine for the paid futures, you know that's true. I've been reviewing it with you every morning, explaining where they were. All right. Second thing, higher lows, higher highs. There's no sell signal here. I kept calling it a rally in a bear market. First one to tell you. Now I'm wondering, is it a rally in a bear market? What am I dealing with here? Next. From here, are you going to the 200-day average at 43.20? It's a potential target. Where's the Bollinger Band? Right here in front of it. So I don't think you're going to do that. I think the 42.10 level is a much more likely target since you have an embedded reading. Let this figure itself out. You're going to say, do I buy up here? Where? That becomes your question. I know that from here, I don't see a potential buy at this point in time. In the NASDAQ, embedded reading, why not the upper band? Okay? Lose the red line under 79. I think that's it for this run. But right now, you've got a lot of people, not my people, not my subscribers, short. There's been no sell signal. Higher lows, higher highs. I just don't believe that this market has the legs that it's had, and I haven't been right on that. The Dow? No. I'm sorry. You get up to Bollinger Bands, I want no part of this market. Okay, this is where I tell people to come out, not in. So if you're looking for me to tell my clients to buy it here, I'm going to walk away from it for a bit. Same in the Russell. You flirted with losing the reading and you came right back up. Not much you can say. Now, when you come to the VIX, here's what I think happened, and this is a big warning sign. You got down to the lower band. Every time you've gotten down there, Just pay attention. You've gotten back to that 18-day average. To get there from there means you got to have a stock market break. Just telling you how that is. That's what I think is going on. It is an embedded reading. It is bearish. Ideally, a bottom forms for this market, bearish for stocks when you lose the embedded reading. Haven't done it. Now we get to what the Fed's going to do. 528,000 jobs, inflation falling. Is inflation falling because the Fed's made a couple of rate hikes or because of the law of nature? In other words, high prices. What is the solution for high prices? High prices. Because it attracts goods. Whatever it's going to take to get rid of the high price. Want to pay somebody tremendous overprice for labor, you'll get applicants around the block. Then you'll say, well, I don't have to pay that much. Boom. What about the warehouses? I hear for over a month, I've told you what my friends have told me. I was breaking this news 4 weeks ago. One of my buddies was out there with golfing, and his buddy runs a major national freight company. He said, everywhere we go, the warehouses are full. Well, you're hearing that is the problem. But the CPI, if you take a look, jet travel down, gasoline down. Food's all over the board. Some are down, some are up. The expensive meat's down 2-3%. I was looking at that. Cars, they're not down. As fast as the automakers can build a car, ship it, it's getting sold. You're not getting more than that 35, 40-day inventory out there. It's keeping prices very high. Is this the same event that the Fed had wrong before? At first, the Fed said the inflation was transitory off COVID. Now that prices are breaking, are they going to say, well, they are, but they're not fast enough or they're not breaking enough, and they end up actually breaking very hard? Fed's got credibility issues here that I'm betting on the Fed, so don't get me wrong. I think they'll get right. What about here? Well, if you're doing anything, you can see the resistance zone. The market doesn't seem to know what to do with it. You never go short under a Bollinger Band. This is where the pros cover the break in the dollar, and it's where they get out of the eurocurrency, in my opinion, on the rallies up there. Do you honestly think the euro's stronger than the dollar right now? 528,000 jobs, a CPI that's falling back. Europe's got the energy issue. Go no further. Forget the heat issue and all. The energy issue. They can't resolve that. Putin has them over the barrel. He's playing for winter to come. They have to cut back their factory usage, how much heat you put in your house. That's all coming. It's coming as sure as I'm talking to you, unless you have a mild winter. And I got to tell you, I have no idea what Mother Nature is going to do. So we'll wait and see. But it's hard for me to get real bullish on that market from that perspective. I'm a chartist. At the end of the day, I'll look at the chart. British pound. Look at this rally today. Okay, pound's in nothing but trouble. Economically, huge trouble. Went to the Bollinger Band. What do you do the first time you hit a Bollinger Band? Tell me. Out you go. So I think today, the surge was the opportunity in futures to get out of an awful lot of things. Bitcoin's gone nowhere. It's stuck at the 18-day average of closes. The differential in Brent and WTI slipping away. Still very much in a bear market that is, do you agree, trying to find its support right here. Now, Kramer did a whole thing tonight on energy with, I think, somebody named Gran that wrote a report to him, and he was espousing it, where they're talking you could be going down to the 80, 60 level. They're not bullish. That was what I saw. They covered their buck by saying, at any point here you can get a short covering rally, a good bounce, but they don't think it's going to last because they expect world economies are going to falter, pull back. Well, if that's the case, why do I want to own stocks? Something isn't right in this equation for a simple guy like me. If you're going to break energy because you don't get demand, it's one thing. If you're going to break energy because demand breaks a little bit and supply overwhelms it, that's a whole different thing. They didn't explain their position. Not well enough for me. But there's no buy signal here. And there was another cover all short signal if you were short. Same in WTI. Rebob gas has come very nicely off its low. I think I told you, I'm looking at a rounding bottom in this. And we have another holiday coming through the end of the year. Now you can get on the road with your family because the gasoline is down 70, 80 cents in many areas. Why not? You still have those expensive rooms. That's the problem you have to deal with. And food expenses are crazy. Go out with a family of 4. See what you're going to spend. Whoa. Natural gas. This is telling you Chop City. Yep, not Chop Suey. Chop City. This market's about to start doing this. The trade was loading up today on the long side. They don't think tomorrow's going to be a big injection day. I have no say for it. Right now, trend down, bias up. I'm neutral. And I'll tell you, I like being neutral right here. Today caught me wondering, scratching like this, not off guard. I told my traders, don't play this today. So I was not caught off guard. I said, I want no part of it. I don't know what it's going to do if it gets a bearish number or a bullish number, and I don't want to be waiting there trying to figure it out. At the end of the day, it was a pretty darn good call. That's how I think you play these markets. Now, we talk about a lot of this. Unfortunately, I hit the wrong key there. In our Linn research, and we cover everything from the stock indices to the bonds, the notes, currency markets, metal markets in detail, a lot of chart action, charts of the week on it, where we put out price counts. You want to look at price counts. What price counts do for you is they're a combination of Fibonacci swing lines, give you an idea where projections might go. It is not an entrance tool in the market. It is where the market might go. It's a measurement tool, unique to us, and I think you'll find it interesting. To get all this, just follow my hand, put your cursor up here. You're going to see an icon come, and then hit that. You'll be taken right into the area to sign up for everything. You can also go to www.iraepstein.com, and at that point, go to the free offers. Everything's there on the website. I'm Ira Epstein. You have yourselves a great day. I admit, I'm surprised at today's action, but I'm honest about it. You have a good one.